Long association with the New York Stock Exchange has actually come to an end, as one of America's biggest brands moves its listing to the Nasdaq Stock Exchange instead. All good news for the Nasdaq's president, who actually spoke to our Maggie Lake a short time ago.
It's a great day here. It's been a great year. We have had $260 billion in market cap transfer to Nasdaq. Pepsi is obviously a very special one for us, and I think they look at the overall value they get from the exchange, including all the ways we help companies, target investors, our brand support, the indexes that are available at NASDAQ, as well as a better cost structure. So it was a nice win for us.
It certainly was. We know this is hyper competitive. I'm sitting here at the New York Stock Exchange. They tell me they've had 32 of the biggest ones over the last 3 years. You know, you use different metrics. I want to ask you, though, what about the U.S. attractiveness in general? You're competing against each other, but you're also competing against the rest of the world. We have an increasingly active Asia, the Hong Kong exchange. Do you feel that the U.S. is the place where global leaders still want to list?
We do. It is very, very competitive throughout the globe. I do feel that U.S. Investor community is unique. The liquidity pool is very deep here in the U.S. Certainly for high growth companies, the U.S. is still seen as the most attractive marketplace. But as you mentioned, it's very competitive.
You know, this has been an extraordinary year for stock markets, and we see a lot of milestones. The NASDAQ looking square in the face of 7,000. Do you see that as a sign of confidence, or do you worry that people are getting a little bit too exuberant?
No, we do feel it is a sign of confidence. Most of the companies have reported their third quarter numbers, and 75% have been above consensus, 65% beat on the top line, which is better than normal. So you do have companies doing well. I think there's a regulatory environment that is more conducive to growth. And then you do have news like today with the tax bill driving some positive momentum. So it certainly has moved pretty quickly. The markets are up quite a bit this year, but we do feel there's a reason for it, and we're optimistic about 2018.
You know, it strikes me on a day that we see PepsiCo listing that, you know, old habits die hard, and some people I still see it referred to as the tech-heavy NASDAQ. How do you feel about the nature of companies listing, and do we need to think about it in a different way?
Yeah. Well, I think you do. We're very, very proud of our technology heritage. The top 5 largest companies in the world today are on NASDAQ, which is surprises some people, and those are all technology companies. But as a overall exchange, we have a very diversified portfolio of companies, from American Airlines, Kraft Heinz. We just yesterday had Xcel Energy, a $26 billion company out of Minnesota, utility, decided to transfer from New York to NASDAQ. So we've become very diversified. We do love our innovation, our growth, our technology heritage.